Chris, break it down for us. Let's start with Germany. How bad is the picture?
It's a lot worse than expectations, put it that way. These are quite disappointing numbers. So both manufacturing services in decline now, which is a marked turnaround, especially for the service sector since earlier in the year. Manufacturing, it's been suffering since the invasion of Ukraine. It's now got 4 consecutive months of falling order books with an increasing rate of decline as the pressures of the war, energy supply, as well as the soaring cost of living just eat into demand. And we're seeing a similar thing in the service sector whereby demand is being eroded. You had the nice tailwind of pent-up demand after the Omicron variant and the reopening of the economy gave services a big boost in the springtime, but that's faded. In fact, it's moved into reverse as people just suffering from the cost of living squeeze are retrenching on their expenditure on services. But you're also getting a knock-on effect of the weakened industrial sector buying fewer services as well. So you're getting that double hit, consumers being hit by the cost of living and business uncertainty eating into a demand for services.
Chris, are we seeing any signs of disinflationary dynamics in Germany at this stage?
Disinflationary, less inflation, certainly, and very much so on the industrial side. So in terms of supply constraints, yes, there's still shortages abounding, but the incidence of supply delays has come down very sharply again. And what we're also seeing is companies are reporting that they've got a big buildup of inventories of unsold stock. In fact, it's the biggest that we've ever seen. So this is a reflection of weaker than expected demand. Warehouse supplies are building up, and that's leading to increased discounting as companies just want to get rid of some of that stock with the bleaker outlook. So that's leading to quite a lot of price discounting, especially in the manufacturing sector now. So those cost pressures in manufacturing really starting to come off the boil now. And you can see this, of course, through the oil price as well. But it's much more endemic than that. There's a broad-based easing of price pressures in manufacturing. Less so in services where you've got energy and wage pressures continuing to drive inflation there. But even there, we're seeing overall, over manufacturing services, input cost inflation in Germany down to the lowest for 6 months. It's very much heading in the right direction.